I swear, this is my last time trying to record this, and I mean that. If I mess up, just give me some grace. I'm human. I've I don't edit my videos. I don't like to edit them. So if I mess up, it's just gonna be is what it is. So this lecture eight. ICT went over Wix and turtle soups. It's already lecture 8. That's crazy, man. Already 8 lectures in. See what I like. I want to restart it, but I said I was gonna go with it. So like, I just like glitched there, bro. I don't know what I'm doing. So key points, all it is just a high resistance signature. Where Smarty does the work. Jagged edges to smooth edges. That's all it is, and just dumbing it down to that. Using Wix's projections, areas of distribution, order flow measuring, and stop losses. And then we're looking for. He went over turtle soup, which I don't really love turtle soup. I don't really. That's not really my model, but it's good to have the theory, and I don't need all this pressure on myself. That is a key point. I feel like me as a person, I get on here, and if I look through social media, if I look through something, like I'm putting pressure on myself, whether I know it or not. Like realistically, I'm gonna be straight up. Looking at someone else's life, someone else's trading, which is it's very hypocritical, bro, because I'm literally posting my trading, my journey. This is just my this channel is kind of just my documentation. You're putting pressure on yourself. You're putting unwanted pressure on yourself, especially nowadays. Like, bro, I can't even tell you how much poison is out there. It's just poison trying to take your mind, trying to put unrealistic expectations on yourself, and people just generally just trying to get views. That's all it is, bro. Like, you gotta realize YouTube in itself is kind of just it's a job, you know, and people are gonna take that serious, and they're gonna put time. Like me personally, I don't really care about that. I care about more of the trading side, which is why I don't try to do that. And that's why I respect ICT so much. It's like we know damn well he could be doing this. He could be doing like short form videos. He could be doing like, oh, this is how you do this. He could be, but he's putting time and effort. He's doing these long lectures. He's giving long conversations, whether you like them or not, whether you think they're rants or not. There's value in them, and whether or not you like them, I feel like if I'm able to sit down with someone with 30 years of experience in any damn industry, I'm gonna be in there and I'm gonna be listening to that person's viewpoint regardless. And with I just appreciate the time that he's putting in this, because I wasn't part of the 2023 mentorship. I wasn't, and you know what I was thinking, like while I was backtesting one night, I was like, bro, I would do anything to have like a 2024 or 2025. I would do anything, and here we are, and I cannot appreciate that enough. Like I really do, and yeah, we're here. So it's kind of why I'm doing this, is just go over my notes, and kind of just reinforce these concepts subconsciously, and also keep me accountable. So pretty much just gonna go over. I'm not trying to go over these notes. Like, these are ICT's notes. These are just my notes. These are what I took out of the lectures. Like, you might find something different out of the lecture. So I don't really want to go over the notes, honestly. I don't really want to go over them too much. But yeah, so I got some psychological. It's more technical today, more than psychology. I feel like usually when I have a lot of notes, there are a lot of psychology notes, because, you know, like, that's what I find value in, because at the end of the day, it's usually a lot of the repeating phenomenon. It's just reinforcing that. So here, I'm going to turn on my new week opening gap indicator. And here we had CPI today. What do we have? We had a big wick. So we had a doji candle, I guess you could say. So we took both sides of liquidity. We established a dealing range within one CPI candle. This is the 5-minute chart. We put in a high right below a new week opening gap. Then we accumulate. Then we manipulate. Then what do we do? What do we do here? We've accumulated. Then we have manipulated. What's more likely? With respect to this level, perfectly, it's more likely that we're going to come back down to this low. And I really like how you went over the theory behind like news, like data lows, because I've seen like Dodgy, he be on that, like data low stuff. And pretty much what it is just a lot of people went long here, or somehow maybe they got filled on news. They probably wouldn't have got filled. But now there's going to be a larger pool of liquidity here, and that's what we do. We come back down, we reprice to that, we come back down to an hourly fair value gap. This also is a 5-minute fair value gap. So a 5-minute fair value gap right there, boom, taps it right there. And then what do? We seek buy side again, and we just consolidate within the range. And we actually have a nice 350 macro that we're going to go over. This is, I'm recording this one a little bit late because I wanted to go over that lecture more than once just to get kind of good notes out of it. So what do we have here? We have change of state delivery on the 5 minute, then we end up repricing the buy side here, and then we have that change of state delivery. So let's drop down to the 1 minute, and then let's kind of go over this. So what I'm doing here is, what am I doing here? Okay, that's that dealing range. So he kind of went over the wick. So this is constant encroachment of that wick. Like, look at the bodies right there, and then look at the wick right there. He also went over this order block. Let's start right here. So we have news right here. Then we have just big whips all over. Like, look at this. Where are we delivering right to? Isn't that gorgeous? Right at the new day opening gap. That's gorgeous, man. That's gorgeous, man. It's really nice to see. Then we have constant encroachment. We don't tap it. See, this is what happens. Like, sometimes, like, I'll see precision, and then, like, if it doesn't hit constant encroachment, I'm like, man, that's not impressive. But, like, we're still respecting constant encroachment of that wick. We just don't tap it there, but, like, we're still respecting that. And then what do we see? We see displacement. We see that fair value gap. He goes over this being a balanced price range, so we have to include this with that fair value gap. I'm not going to try to teach that. I would watch that lecture instead of me. And then we have that gap right there. That's a balanced price range, along with this fair value gap right here. Also, along with this wick here. I kind of want to, I haven't really, this might be a breaker on the lower time, or a mitigation block on the lower time frame. I do want to grab constant encroachment of this wick too. See how we're respecting constant encroachment of that wick? And notice how constant encroachment of that wick is constant encroachment of that fair value gap. And then he went over this, how whenever we're generating liquidity, or he also went over this in another lecture, I believe. It's in the 2023 mentorship. I know that for sure. I was trying to find the lecture, but I didn't want to do all that work. But basically, anytime that we have, damn, that sounds lazy as hell. No way I just said that. To want to do all that work just to find a video is wild. So basically, whenever we're generating liquidity, or whenever we post a swing high, I'm fairly certain you said this in another lecture. I would not quote me on this. But basically, whenever we have a swing high, and this high, constant encroachment is higher than, if we respect constant encroachment of this wick on the previous candle, this is likely going to be a swing high. He went over that we're likely going to be generating liquidity on that high, and we're likely going to defer that run until when? So 8:30 we have news, so we're looking for a possible 8:30 reversal. This is too much whipsaw here. Like, this is likely, I mean, I guess there was a PPI day that I know I'm talking about. So then we have a 9:30 reversal. What are we looking for? Change state delivery, and then we're looking for displacement. We don't really get any of that here between 8:30. So 9:30 is gonna be our next opening time. What do we have here? Right. This is beautiful. This is beautiful. And here we'll test out swing high theory. So we have a wick. And then constant encroachment of the previous candle. That's respected. We're not going above that. And we're also respecting on this candle. So we know we have a likely swing high here. We have a likely swing high right there. And we end up displacing lower. We'll get into these levels on the very small time frames. Then we have this order block. What is this? 2022 model, but we don't actually end up trading into this imbalance. I do want to look at this in the lower time frame to see if there's something that, like, if this actually might be balanced on like the 5 second or something. And then we have displacement, constant encroachment of that wick right there beautifully, then come back up to where? This gap right there. Also, as well as constant encroachment of this wick. Notice how we're still respecting that with just this wick. And look at this wick. Constant encroachment of this wick and this wick and this wick. So you got a bunch of constant encroachments here. It might be a lot. It might be overcomplicated. But it's order flow. And then what do we have here? We have that wick. Notice how all these are converging. Let's just do a dealing range projection here. Probably 50% of this implied dealing range here. Oh, I thought that was that level. I was like, no way. All of this happened at constant encroachment of this, or not constant encroachment, at equilibrium of this implied dealing range. What do we have here? Look at that respect there at the 25% level, then 50% level, then 75% level. I want ICT to go over more like dealing range stuff, but pretty much it's already been taught. So here we have an order block. He talks about how this is actually an order block now because we have all these order flow measuring order flow. We have all this order flow aligning right here, and we have the left side of the curve aligning right there. Let's see us drag that. Look at the bodies. We have all this aligning here. What is likely going to happen? We're like going to reprice lower. So therefore, we can actually trust this as an order block before it even trades below this. Like this is an order block right there. Then he goes over this order block, how this wick can be a stop placement. Following order flow. Look at where we reprice right to. That rejection block right there. Then we have this order block, fair value gap here for that second stage of distribution, right to this low, and where? New day opening gap right here. Then what do? We generate liquidity right above an old low, or right above a higher time frame PD array. This is not going to be a bottom. This is not going to be a bottom. I saw the signature when I was backtesting earlier. This is not a bottom, like whatsoever. That's not a bottom. We're kind of digging this new day opening gap. So like, yeah, we can have a possible reversal at a new day opening gap, but this, we need to see more manipulation. This is just that initial leg to generate liquidity. So we have a repricing higher to generate liquidity, and then come into this gap right there. The bodies are kind of overshooting that a little bit, and then we see another smack lower here to this higher time frame PD array. I don't know. I didn't really check ES. We don't really have to check it right now, but we might have SMT, we might not. But let's just look at order flow and look at this. We have, what do we have? Fair value gap in, fair value gap out. We have balanced price range right here at a higher time for PD array. And we'll look at this breaker right there. Mitigation, all offering new areas of distribution. Somehow this macro got messed up here. I don't know when that happened. There we have that macro. And then what do we put in here? What time is this occurring? What time do usually highs form? Usually, generally, during macro times. Here we have a 1150 macro. We put in a high. I don't know the exact PD array that we are referring to here. Okay. Probably a daily imbalance. I didn't really look at that, honestly. I've just been looking more at the intraday charts, which that's cool. We're coming up into that PD array. We're coming right into that new week opening gap right there. And then we're coming back down. This is all just time distortion in my opinion. And then we have a nice 350 macro. We have a nice 350 macro trade here. So what do we have? SMT gets formed here. Fair value gap in, fair value gap out. This is an inversion. This gets respected here. Waiting for that 350 macro time right here. And this is actually nice. And I saw this happen like 2 other times while I was backtesting earlier. So I'm gonna continue to backtest this. But like, it's kind of cool delivery. I'll go over that in a minute. Like when we just hop down to the 5-second chart. But notice how we start getting more aggressive here right at 350. And we come back down to this imbalance right here. Also where? Order block. We actually don't touch that. And then it repricing right to buy side, coming back down, fair value gap below, and then more expression higher here. So very nice 350 macro right there. I don't really know what all this is here. I know this is the mitigation, or this is the breaker here. And also this is a breaker right there. Oh, that's a breaker that we repriced right there. So let's drop down to a astronomical time frame, a 5 second. And since I got this, I thought it just helps you. Like, obviously I'm not going to take a trade on the 5 second. It's just stuff to look back for order flow purposes. And it's been honestly helpful here. So here we have constant encroachment, which is the open of this candle here. We have volume imbalance right there. Reprice, take buy side here. Buy side taken, market structure shift. We don't really have an imbalance that we step back into. Come down, constant encroachment, respect that. I honestly don't know what this is here. Wait, it was something I was trying to highlight on the 1 minute chart, I feel like. No. Okay. And obviously we're just generating liquidity here. And at 9:30, where's 9:30 at? 9:30 opens right here. come up, come back down, reprice to where, order block, displacement higher, right in that new week opening gap. You can't see it on the 5-second chart, it doesn't establish. And then what do we have here? This inversion level, or actually technically it would be this inversion level here within the breaker. That's what we refer to. Look right there. Very sensitive. Then we displacement. Then we have this imbalance right there. Then we get displacement lower. We have this volume imbalance along with this 1 minute fair value gap right there. Then we draw lower here. And then we, oh yeah, this was the 1 minute fair value gap that we didn't draw into. We kind of just stayed around right here. So we actually look at this. We have this part of the inefficiency that's left open here. So it really isn't that inefficient. We have this gap that we leave open and we want to see breakaway gap. So we end up consolidating. We can't reverse from a consolidation. So what are we going to do? We're going to expand. Here, institutional order flow entry drill on the 5-second. Why? Because of this wick right here. That wick right there. This acts as a balance price range. Right there, that wick. Then we come back, fair value gap here. Is that a new day open? Oh yeah, that's the new day opening gap level. I didn't talk about that, but since there wasn't actually a new day opening gap, it's just a price level. That price level is still going to be influential here. And then we have this fair value gap right there. So we come back lower, constant encroachment of that wick, hammered right there. Then we come back up. What are we taking here? Buy side. That's the turtle soup that you went over in the lecture. Then we have buy side taken. Shift in market structure. Is this the 2022 model or am I tweaking? 2022 model right there. Beautiful. Oh yeah, inversion level tapped right here. Very nice right there. Inversion level right here. Displacement. Then we come back out into that constant encroachment at that level. I thought this delivery is nice. This delivery is beautiful here. Like that delivery right there. Filling that fair value gap right there. And if you go back up to the 1 minute chart, like if you rewind, that is this right here this is the wick on the 1 minute chart right here. This is all a wick and this is the body. That was the rejection block I was talking about right there. So that's just that delivery on the 5-second. Boom, straight delivery. Then displacement here. We leave breakaway gap. What are we referring to? We're referring to that order block right here. We have buy side taken. Market structure shift right here. What do we have here? Fair value gap. Whoa, look at that. Then we see displacement. New day opening gap right here. Generating liquidity, coming back up. What is this? Buy side liquidity, market structure shift. We actually don't really have a fair value gap within here. We don't. We have this one, but that's not before the market. That's before the market structure shift. I guess here. But obviously we're not using the 5-second as entry. We're just using the 5-second time frame to dive deeper into algorithmic order flow. And yeah, we end up consolidating here, expanding. Volume balance right there. Boom. Displacement, volume balance right there. Or this actually is a liquidity void where no trading at all was taking place. And we come back lower into that higher time frame PD right here. What do we have here? Stop on it there. Order block right there. Traded into this rejection block right here. Displacement, volume balance right there. Fair value gap right here on the 1 minute. That fair value gap, that volume balance, not fair value gap. And then, yeah, we just enter this buy model here. And then I just want to go over the 350 macro. But actually, I do want to go over this macro here. What do we have here? This ICT kind of went over this in the previous lecture when we was talking about the macro, but this looks very similar to the macro that we had here. What do we have here? We have a stop hunt within this macro time. We're trading into a higher time frame inefficiency. This is probably a 15-second, 30-second, or 1 minute fair value gap. We can see this imbalance right here. We're trading right into. It's just not like. I guess we're trading into this, which I'm fairly certain ICT is talking about this as a PD array. I'm not trying to pretty sure that's a PD array. Like balance. I think that, I don't know. I don't know exactly, but yeah, we're coming back into that area. We're referring to that area. Sell side taken, shift to market structure. Again, same thing. This was that same principle talked about earlier with that fair value gap over there on the left side of the curve. That's this gap showing up here. So include that right there within the gap. And then we're just seeking buy side. We're in a buy side liquidity. We're in a buy program here. Come back down, retracements, expansion. I feel like 5-second time frames, like it's very small. This drop lower, in my opinion, I don't think it's something that I'm gonna look for in the market. Like this doesn't scream my model. It's almost too lunch. It's in the lunch macro. But what do we have? Lunch macro. We have a retracement, and like there's not really anything that I love out of that run. So I mean, I still kind of went over it. I'm not gonna go over it in this video because I don't think that's important. But obviously it's order flow. So okay, this is what I want to look at here. So I also want to, I'm going to continue to back test this. This is kind of just something that I saw. I don't know if it happens every day, but notice how animated we get right at 350. Right at like animated right at 350 on the 5-second chart. Like, I don't know, like here, slow, 350, boom. What do we have here? Judah swing. And then what do we have here? Retrace back in this imbalance here. Stop hunt. Turtle soup right there. Then what do we have here? We have that inversion level right here. This gets inversed, shift to market structure, trade back down to where? Trade back down to where? Volume imbalance. And notice how we're trading this volume balance here as well. We're respecting that. When we're respecting volume balances, that's pretty telling, in my opinion. From what I backtested, that's pretty telling. And then what else we have here? What we just discussed right there. Look at that. And then volume imbalance again, telling displacement, come back down. And oh yeah, this was this gap here. This was this gap. So this imbalance right here, this is definitely cherry picked. I'm saying, like, I would not look at this in a live chart and expect this, but this is cherry picked. This hindsight. Look at the body right there. Look at the wick right there. Look at the wick right there. Look at the wick right there. So obviously respect around this. I like truly. I'm saying, like, I would probably include that, but you know, you gotta cherry pick some levels when you can. You know. Don't lie. Like you be doing that sometimes. I be doing that all the time. Like especially when it comes to standard deviation, I'll be like having a leg, and then like I'll just like delete it, and then like when that level lines up, I'll be like, bro, look at this. Like, I don't know. I feel like that's just how I am. You know, we're coming back down this inefficiency here. These 3 down close candles. Beautiful macro. Beautiful. Like this is very like it's gorgeous. This kind of looks like bonds a little bit, like bonds price. It looks a little bit better, but like, oh, like that's just gorgeous right there. I might just start trying to just trade the 350 macro right here. What do you have? You have a buy program here. You have a sell program here. So what do you have here? You have a full on finishing a higher time frame market maker buy model here. Then you have sell side of the curve and buy side of the curve, all within a macro, all within a macro. And I low key kind of just want to like. I might make some videos on this. I might use this as an example, low-key. I don't know. I'll see if I can cherry pick. I kind of do want to make videos where we kind of just go over macros and then like dive deep into a macro. Like 5 second, 1 second. And we see like, is there a buy program? Is there a sell program? Like, is it all together? And then what do we end up doing? Kind of just petering out for the end of the day. But overall, I thought it was a fantastic lecture. This was fantastic price action. Like, we're looking for swing trading conditions, as he was talking about. Looking for swing trading conditions. Beautiful. Buy model, sell model at what time? 10:30. We have a reversal up until when? 12 p.m. Lunch macro comes back. We consolidate. Then what do we have? Manipulation. Then we have a accumulation. Manipulation. Boom. Distribution. Here we have I kind of like to call this like a seek and destroy manipulation, but or this is like a double purge. We take both buy side, then sell side, then we distribute. So now both buy side, sell side have done the work. We have SMT favoring this side. We have inefficiencies above here. We're likely gonna reprice there. And when we're within an already existing buy model, like you like, this is what I'm talking about. Like earlier when I started off with the expectations, like, okay, we see this, then we see displacement above this imbalance right here. We see it got respected here. 350 macro starts right here. What is more probable? What is more probable? We're more likely at this point during this 350 macro, which is why I do like the 350 macro. We're more likely gonna head to these stops right here, rather than, oh, we're probably just gonna come back down here. You know, this is a sell side imbalance that we're gonna respect. No. Look at that. We come up, we take buy side, and there's that. So very, very nice day in my opinion. As always, every day is a nice day. That's how I like to internalize it. I like, yes, I get like, there, in my opinion, there's like, you don't want to be saying every day is a good day because you don't want to be trading every single day, but I think that every day is a great day in price action. Like today, the day I'm recording this, probably was terrible price action, was awful. Like I couldn't find anything. But if you say price action's bad, like your subconscious mind, like, sorry, I'm on this like subconscious mind stuff because it's important, but like if I were to say like, oh, like I used to say, dang, bro, this is so choppy, like, oh, this is so bad, the algorithm is just marking time. That's all we're doing. Like this is just time distortion, and if you call it bad, you're just gonna have a bad connotation around that, and then you're never going to be able to kind of dissect that, which is why price action, no matter what, like this price action here, this was phenomenal price action. Like this was beautiful price action. The algorithm's doing what it's coded to do. That's it. This is beautiful price action. Like what are we, like? I know I'm kind of like over. You don't gotta be like that. You don't gotta be like that. And if you're like that, cool. So, anyways, this was price action today. Hopefully, you all have a good rest of your day. If you are watching this, I appreciate you. Anyways, have a good one, y'all.